interesting situation.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I am the very stupid Scruffy trader. And why is that? Because I'm about to go back to market when I don't need to. I'm doing it to show the guys in the squad, to be honest, and back up something I did earlier on today. And what I'm going to do is give you guys a quick snapshot of what I'm doing. And basically show you how a fib can be used on an excessively, well, let's just call it an excessive move, because cable tanked this afternoon. Now, I was fortunate. I've already traded it and been in and out. I was out before it tanked, but what goes down must come up, and what goes up must come down. And if something is caught off guard as quick as this, it gives a good opportunity. I'm going to show you how to trade it. So this is real time. If you look at it, it is 5 o'clock on June the 1st. There is a thumper of a move here on the hourly. It is 1, 2, 3 hours of solid selling. Smashed through the zones and stalled. And this tail is interesting towards me, and it is moving up. So I can see there is an end point here, so you can see a defined low, and you can actually see a defined starting point, which is here. Just draw that in, and then I'll move it to the top of that there. All right, so that's created a trading arena within a trading arena. Now I do have a buffer here. Now if I'm looking to grab a few pips, sort of, I don't know, 10 pips, shall we say, and I just draw in a little box. That box represents 10 pips. So I've got plenty of room to grab 10 pips from where the price is now to where this kind of block is. Now I like to wrap zones round a key level. Why? Because price is not pip perfect, and if it gets into the zone, I'm quite happy, sort of thing. But I also need room for it to breathe. Now what I'm watching at this moment in time is whether this low is going to be taken out or whether it's going to try and push up. So how do you do that? Well, if I take it to a 15-minute chart, now you can see what was drawn in, which is here. There's been absolutely no reprieve at all, but it's starting to stall out. Now it could easily push down into this green zone, so I've got to be a bit careful. So what I'm going to do is I'm going to draw on a fib. Now I'm going to take it from the start of this candle down onto the base of this candle. Why? Well, it just helps me. This candle is the first candle of that move that I can see excessively on the 15-minute. Okay. Now I could have taken it from up here, but I drew a line in off the hourly, and that is the closest one to it. So that seems to be common sense as to that was the start of the move. So now it's mapped out, and I have clear exit and entry points with the fibs. So how will this help me? What can I do? Well, I know I want 10 pips, and I know I've got plenty of room from there up to there. So my target point is the 23.6. That's what I'm looking to achieve, as long as it doesn't break the bridge of here. Now, I've got plenty of money to play with if I'm wrong. Why? Well, there you go. I've had a bit of a good day today. You saw the other video, you'll have seen that play out. So all I'm going to do now is I'm going to drop it into 5 minutes and have a look to see what the makeup is. Well, the makeup is very simple. You can see it there, reprieve. It's had another flush, but now the buyers are coming in. Now, if I do a candle count, 1, 2, 3, 4, 5, there's the highest point. You kind of look at best guess. So just go point to point, across there. I want to get in roughly around this area. So easiest way to do that is just drop yourself a little order in. Nice and simple. Just above it. We'll set it for about 10 pips. Just like so. I'm just going to edge that onto there. As you can see, I've got plenty of room. Just get rid of that so we can see it. And what I'm going to do is I'll just thicken these up and widen them out just so you can see it nicely. There we go. Right. Kind of going to leave it there. 10 pips, because up there is that 23 that we saw. Now, what you can also do, if you are quite brave, we can use the 23 as an entry to get up to the 38. Pull your stop to break even once that 38 is hit. So you just pull it to there and then see if it rides it up into the 50. And then move your stop up a little bit more. See if it will ride itself up into the 61 and so forth. And you just kind of ratchet your stop going up, but take a little bit of profit off each time and you'll be fine. And this is about as simple a trade as it gets, because you don't really need indicators with this. Why? Because the move is so vicious here. It will catch any oscillator out. It'll just force it to the ground or to the top, depending on the direction. So all of your oscillators are a waste of time at this point. It will force out your moving averages because they can't catch up with it either. So what you're actually relying on is the best indicator there is, which is price. The price is telling you what it's going to do. And then you map it with a frame. And that frame in this instance is a Fibonacci, because you have a defined top and a defined bottom. And as long as the price stays between those 2 points, it is in play. Once it moves out of it, then you have to start thinking about damage control or getting out, whichever way you want to do it. Now, we've just been triggered in. Now, an easy way to set it up, you will see on a Fibonacci tool, it often goes to a 127 extension, which then moves to a 161. You could use them as your soft stop and your hard stop, or just area or somewhere between the two to place your stop. In other words, as soon as the low is broken between that low here down to the 127, you might be wanting to think to yourself, well, maybe I'm wrong. Maybe this is going to carry on to the lower levels. Again, using your Fibonacci to help. So what I'll do is I'll let this run out. We'll see if it runs up to 10 pips. And then I'll come back to you with a little bit more advice. Okay. Okay, guys, job's done. It's come up. It's hit the 10 pips that I was after and dropped a little bit extra into the bank. There you go. So that's a little bit extra for today. Now I've had a colossal few days. I don't need to work now till next week. Why? I don't gamble. I shouldn't have really took this trade. However, it was one of those situations where it was excessive and there has to be a reprieve, a pressure release from the trade, and you let the hourly candles close as I did at the top of the hour, and then it's a case of just waiting and measuring out. Simple stuff. So, you happy?
Very happy.
Shall we put that in the holiday pot?
We shall.
We shall. You are a lady luxury, aren't you? She's hassling me, boys and girls. She's hassling me. Apparently buying that new bikini means it has to be well used. Not in the way that I thought. Apparently it means cocktails by a pool and down by the beach. So, going to be disappearing off yet again. Why not? That's what trading's all about. You know, live your life. Earn your money. Live your life. And become a time millionaire rather than a cash millionaire. And that's one of the beauties that we've come to enjoy. Apart from her, because she's a beauty anyway, aren't you, sweetheart?
Oh, listen to you.
I know, but sorry, that'll be X-rated for another day. Shall we make a video? I meant a trading video.
All right, yeah, trade video. No, you didn't. You didn't at all.
I love winding her up. It's my favourite hobby. Right. But there you go, boys and girls. It was just a very quick off the cuff. Just to show you that if you do see something that's out of the ordinary, it can be an opportunity and some quick money if you need it. So as always, keep your risk managed. Actually, I got tongue-tied there. Do you know why? I was thinking about making a tape with her. Wee. Sorry. Trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.